Hello everyone, today is the 8th of August 2025. How come the higher SoftBank's share price goes, the bigger the hole in its books is today's Just Dario Daily. SoftBank just reported its financial earnings for the quarter ended on the 30th of June, and as I'm writing, its shares are trading 10% higher on the day to a fresh all-time high. 3 months ago, I wrote, SoftBank goes all in on AI with the little money it has left. And this is how the Wall Street Journal commented on the results SoftBank just released. SoftBank Group posts quarterly profit as AI bet pays off. Great! Masayoshi-son gambled and he won the bet. Not really. First of all, Vision Funds Investments reported a total net gain of roughly 451 billion JPY in the quarter. What was the driver of it? Roughly 1 trillion JPY of unrealized gains in the quarter. In other words, SoftBank took a pen and revised higher all mark-to-market valuation of its Vision Funds investments. This isn't the most interesting thing though. As you can observe in the table here, SoftBank recorded exactly the same amount of unrealized investment gain 1 year ago. What are the chances? Well, you tell me. Different from a year ago is the amount of losses recorded from investment liquidations. And voila, because of selling fewer holdings at a loss and adjusting mark-to-market valuations higher, despite every time investments are sold, losses are recorded, SoftBank can report a chunky gain in its Vision Funds investment business. As a result, as you can see here in the next table, the increase in cash held by SoftBank Vision Funds was minimal and remains near zero. On another front, while SoftBank conveniently adjusted the value of its private investments higher, the performance of its investments in publicly listed stocks goes in a diametrically opposite direction. Here, SoftBank reported an investment loss of roughly 256 billion JPY, mostly due to 402 billion JPY loss on T-Mobile shares, 171 billion JPY loss on Alibaba shares, and a 210 billion JPY gain on Nvidia shares. If you quickly do the math, SoftBank's quote-unquote AI bets paying off, as the Wall Street Journal states, isn't it simply the result of gains recorded on Nvidia shares? Yes, it is. How convenient, right? Hold on. Didn't SoftBank hedge its losses on Alibaba via derivatives a long time ago, as I discussed in the article in A Scramble to Survive, SoftBank is killing Alibaba? Yes, it did. Thanks to prepaid forward agreements, SoftBank managed to dump Alibaba shares without technically selling them. Consequently, in this quarter, SoftBank reported a derivatives gain on the contracts linked to Alibaba shares of 143 billion JPY. But hey, here is where things become murky though, because SoftBank lost 171 billion JPY on Alibaba due to the settlement of the aforementioned prepaid forward derivative contracts. And here on screen, you can see all the details about it. How did SoftBank's cash increase by 472 billion JPY compared to the previous quarter? Very simple. As you can see here in the disclosure of the company, they simply raised more debt. Ultimately though, compared to 1 year ago, SoftBank recorded a cash drain of 1.3 trillion JPY. And this, as usual, brings us to take a look at its financial stability, which remains precarious, to say the least. Total current assets are roughly 9.7 trillion JPY, of which 4.2 trillion JPY of cash and equivalents. What about total current liabilities? 11.6 trillion JPY, of which 5.2 trillion JPY of interest-bearing debt and 2.3 trillion JPY of deposits from the banking business. Clearly, SoftBank will continue to be forced to sell its liquid assets at a loss because it has no alternative due to the gap between current assets and current liabilities. Considering banks are also increasingly reluctant to lend more and more money to the company. Loans that, for the most part, are quote-unquote guaranteed by the following non-current assets of very questionable value. Investments accounted for using the equity method, 675 billion JPY. Investments from SoftBank Vision funds, 12.5 trillion JPY. Investment securities, 6 trillion JPY. Derivative financial assets, 185 billion JPY. To conclude, and to give an idea of how precarious SoftBank's financial position is, the company disclosed in its latest earnings that it needed a $1 billion refund from OpenAI in its latest funding round, led by SoftBank Vision Fund number 2. And that was totally paid for, the part due from the fund, with borrowed money lent by Japanese banks and, of course, accounted off the books. How will SoftBank be able to pay for the remaining $20 billion funding it committed to OpenAI? How will SoftBank be able to pay for its part in the $500 billion Stargate project, or shall I call it Starfake, it promised to President Trump? How can SoftBank remain in business if it's dependent on constantly raising short-term debt to support its operations? I'm sorry, I have no idea, but surely they bought one more quarter of time thanks to the incredible accounting shenanigans Masayoshi Son keeps using, and nobody pays attention to. Investors apparently love this and are sending SoftBank share price to the stratospheres. Apparently, all of them also forgot what happened roughly 25 years ago when Masayoshi Son used the exact same playbook he is using today. Thanks a lot for listening to my episode again today, for liking the video, for subscribing to my YouTube channel. I would like to remind you the special offer that we have at Synax till the 30th of September to access 1 month free unparalleled stock market intelligence and then lock in a 1-year subscription for just $15 US. Thanks a lot for supporting me on X, for following me on Instagram, and for reading and commenting my articles on justdario.com.